Mic test. I think this is mic test. Okay, we figure it out. All right. Where's my stuff? Hey, thank you, Thomas. How are you? Thank you so much. Thank you so much for tuning in to 8,000 viewers. Wow, good. That's a record breaking. Okay. Mhm. Okay. Okay, guys. All right. All right. All right. Okay, I just entered the trade, and let's see. We'll observe this trade. So I'm going to explain to you step by step my trading strategy, and I don't know. I hope you will like it and it works on your strategy. So uh, yesterday, uh, I used my old strategy, and I kind of not follow this strategy that I am testing it right now. And then I pay the price. I have like 800 loss, and then after that I stopped trading. Actually, I reached up to more than 1,000. Then I stopped trading. So this account that I'm sharing. This is my other 50K account, and it's connected to Tradeovate. To Tradeovate, you can connect Tradeovate to TradingView. So I'm still on the same platform, which is TopStep. I'm not affiliated with TopStep, and I'm not I don't know. I'm not endorsing them, but kind of, yeah, maybe. They're the best here in the USA. Um, Other than that, disclaimer: I'm not a financial advisor. I don't know much about uh, financial. Like I'm not an advisor, so I'm just here just to this is for entertainment purposes only, and I just want to share my trading strategy and a little bit background. Mm, well, I can say I've been trading for quite some times, but for now, I'm not really that profitable trader. And then just recently went back to trading, and I was a few forex and cryptocurrency trader, and then I switched to futures because that's the most. I think it's more profitable. I think the liquidity and the volatility in futures is, I think, the best I can say, maybe. Hmm. So uh, I was fan of ICT for quite some time. I've been using ICT on most of my past trading ventures, but uh, I lost a lot using ICT. I'm not that good at executing ICT. So now I'm back at the most basic trading strategy that you can use and you can apply, and it's available free on all of the trading plat platform platforms. And this is the moving average. It's a kind of combination. Mine is a scalping strategy. It's a combination of exponential moving average, simple moving average, and then super trend. So I put on the description what are those indicators and what are the settings and how you apply it, with some additional steps on how you do the scalping strategy using moving average cross. So this is moving average crosses is famous. It's been there for a long time. It's been invented like long time ago, uh, and people are making money using moving average. And I think this is the most, but for me, less headache form of strategy. So you can literally trade without seeing the candle bar, just the moving averages and the crosses. Yeah, just the moving average. Someone told me that. So okay, uh, it's kind of noisy here. I'm trading on our living room, and bear with me. My kids will come sometimes to disturb me and make some noise. All right. Uh, let's see. They're there. So I will explain to you, to those watching, how you will how to execute this trade, and this is so easy. I put the the steps on this description on how you use it and how I come to this entry. Why I have this good. Thank you, Philip. It's great. Said it's a great entry. So it's because I'm following strictly the rules on my strategy, which is if you go to the description below, I put it there. So first, you set up your chart, add indicator. I'm sorry, my kids. Okay, go to your mom. Wait, wait. Pupo na, Jun. Love you. Go, go, go. Okay. So set up your chart, put an indicator. You can find it on all of the trading platform. The first indicator is the simple moving average, and you set your simple moving average to a length of 9. You can choose your colors if you want. The second indicator is the exponential moving average 21, and these two is the most important part of this strategy. And then on the EMA 21, you set the setting to set your shooting line to 10. And I will tell you what's the purpose of shooting line 10 in there. And then after that, set your super trend indicator to ATR of 14 and a factor of 3. To those of you who doesn't know ATR, so this is a average true range, and this will determine your super trend. An ATR will tell uh, your trend and your range, but you don't need to go too deep on that. I will just explain to why it's there. So this is the this strategy. That's the component of this strategy. Let me show it to you. It's all there. Super trend with the length of 14, factor 3, exponential moving average 21 close. You need to follow it exactly. And this is smooth moving average 9 close. Okay. So back in the when I back testing this strategy, I used to add RSI to identify if it is overbought on oversold 70-30. But I think if you add that, you will end up having no entry for the rest of the night. If the market, especially if the market is consolidating like what we have here, okay. Uh, so that's why I remove it, and then I also add a volume just to determine uh, how how powerful is the retest and how powerful is the breakout. But I also found that a little bit. I know it's useful, but on this strategy, I think you don't need that because this is you're just observing. This is just a pure price action, but you don't need to worry about price action because there is a uh, specific things that you find in order for you to have a good entry. If this is a good entry, I cannot say this is a good entry, but I can minimize my risk even though my stop loss is here. I there's a way to identify if the market is like reversing, and then you don't need to wait for your stop loss to hit. You can exit earlier than that. Um, so let's see. What else I can say? Let's move on to the steps. Okay, so now on Asia market or in any market, London, Asia, New York, you will not enter a trade unless the market is open. So if we are now in Asia on Asia session, and we consider this a slow market. Slow market is one of my favorite to trade using moving average because sometimes it is one directional. Sometimes it's one directional. So first thing you need to do, uh, because of this trade will eliminate like higher time frame analysis on the bias or on the movement of the market, bulls or short. But I'm not limiting yourself to do that. If you really want to do that, you can check starting from 15. But for me, because we are scalping small pips, I want to see the I want to view the whole trend using 5 minutes. So right now we are on 5 minutes, and I can say this market is on consolidating. So they said it's choppy. We're on consolidating, and some of the moving average trader they don't want to trade on consolidation because this is one of the weakness of moving average. You don't trade on a consolidation. But if the consolidation is like on 15 minutes for me, if I see there is a good range, like for example this one, we are on 5 minutes, and if I have this range, this is our range right now. If I have, if you're in trading view, you can use this indicator for free, the Lux Algo session sweep. You will know, and you will know where's the price ranging from the session yes today. So right now, this is the session that this is the range that we have. This is the lowest price for today, and this is the highest price for today. I kind of like this because the London and New York and Asia have the same highest point. So when I was using ICT, this is very useful for me. And then there's a new this is the lowest for today's New York PM. Uh, you can also if you really want to predict, like you just want to predict or predict. Trading is about prediction, you predict where the price will go, right? So you can draw your premium and discount. So I set up my Fibonacci retracement on like this one, so that just to know where's the 50%, where's the equilibrium. So right now the equilibrium here, this is the price. Some will not short because we are right now on discount. Most of the trader will buy, but since we are scalping, I don't care. And then my strategy tells me that I should short by this time. Okay, so enough for that. We'll go on to the main strategy. Okay, so first observe your simple moving average 9 and 21 after the market will open. So once that moving average cross, you can see here, it did cross. Okay. I mark it. Sorry. This is the cross here. You see? The blue line crossed the green line, which tells me that the price the price is going down by this time. And then after the price will cross, wait for the super trend to support the downside trend. So the super trend shift to a bearish. You see? Okay, that's the number two. Number one, cross. Number two, shifting. Let's. So yesterday I did not follow that. That's number one. And number two is the shifting of the super trend. Shift here. So now we are on short, okay? And then I don't want you to enter here, even though there's a shift on the trend, because this is not confirmed. What makes this trade confirm as a short is once there's a market shift. This is the market shift here on a 1 minute time frame. That market shift. This is no, not that one. I'll not consider that one. This is the market shift here. Okay, this one, market structure shift. Okay, that's a market shift. And then what makes this a market shift is because it's created by a displacement. This is number three. Number three, displacement. Okay, this candle here is displacement and created a market shift. So I consider this number four, the market shift. Number four on the things that you need to look before you're going to entry. Okay, so number four. So this is like 1, 2, 3, 4, 5 maybe process. Okay, now you confirm that you already know that the price will go down because we are scalping. We're hoping that we have like 100 pips for tonight. We'll hit 100 pips. That's our target. 1:2. 1:2. 1:2. That's our target. 1:2. So I'm trading real account while sharing my strategy. I want to share this strategy because to those beginner, I don't want you to go through the process that I went through when I was start trading. A lot of depressed. I was depressed because I kind of lost a lot. Okay, so we're aiming for 1:2 tonight. So let's put our, okay, that's our target. Now, number one, you have the cross of exponential of the moving average 9 and 21. And after that, we wait for the super trend to reverse. And then number three, we wait to have a displacement. And then number four, we wait to have market shift. Number five, it's kind of a lot, but once you are familiar, once you get used to it. And this is number five. It's the appearance of any fair value gap. So this is a very fair value gap. Once you have these five components, and that's the time you can set your limit order, or you can sell manually. So where is your entry? Your entry is on the 50% of your 50% of your fair value gap, like on the middle of this inefficiency candle, the middle of that inefficiency candle. So you put your that's the optimum. That's the optimum entry. But if you don't want to, sometimes price will not go on that high. Sometimes price will not go that high. We'll just touch the the baseline of, if you're selling, the best baseline of the fair value gap. Sometimes the price will just, so that's why my entry is there, because I'm trying to catch the move. I was expecting that it will be a big move, but during the Asia session, don't hope for that. Sometimes it will not happen. But on Sunday, if you want to trade the market kickoff, which is every Sunday night, there are there are always big movement once the market opens, because it will be Monday on the Philippines, Southeast Asia, or on Japan. So there's a good volume. So you can put your entry here. So I put my entry there. So that's the steps for finding an entry and confirming your bias for scalping. All right. Now, I told you that I will explain to you what's the purpose of. I put it here. Okay. Okay. What's the purpose of? What's the purpose of? Where's this? Yes, maybe. And what's the purpose of this shooting line 10? This shooting line 10. Put it under the EMA. So the length is 10. Okay. So now I think we're gonna see it. What's the purpose of that? Bye bye. No, 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 we cannot go. Bye bye. Sorry for that. I'll tell you what's the purpose of that sewing line, and maybe we will use it for tonight. So, if you are afraid that you're there, just a minute. Hi, live. Hello, sorry for that. So, tell you what's the purpose of that high life pub style. Thank you for tuning in. So, what is the purpose of that red line, which is the shooting line for the exponential moving average 21? So that line will tell me when to exit the entry if I'm afraid of my scalping, or if I'm afraid that my trade will go to will go to opposite direction. So once the blue line, which is the moving average 9, cross this red line, I have an option to. It's almost there. I have an option to exit, or flatten my trade, because I don't want to risk more, or I don't want my stop loss too. And then that's the first option. All right. My the kids is serving. Okay. I was explaining what's the purpose of the red line, which is the suiting line for the exponential moving average 21, and the length is 10. So this will tell me to when to exit early. So you have an option like now, like this. If you don't, if you're not comfortable with the trade, with the direction of the price right now, the blue line, which is the moving average 9, crossed the red line. So this is the time to exit if you want. That's the first option if you want. The second option is once the price will invalidate the fair value gap. This one, once the price will go up and then invalidate this fair value gap, you don't wanna pay for more. You can exit the trade, or you can always go back. You can always enter the trade. So by that way, you minimize your loss, right? Yeah, and then the third one, you exit once this blue cross the red, invalidate the fair value gap, and then the the super trend reverse. But once that happened, the price is all will be already here, and then you will lose like this one. My stop loss here is like 300, so like you will lose like 275 already. So that's what will happen. So I always use this strategy on a past market, and I'm using micro because during New York time, it's the volume is high, it's volatile, price is fluctuating, and then if you use micro like what I'm using right, I mini position one like what I'm using right now, you'll be the market will swallow your stop loss. So that's why during that time I use micro. Okay. So now I will exit this entry. I'll see. So see, there's a shift in the market. So if you are afraid that the the price will reverse, and this is a time for you to exit. Okay, and then we can always find another entry. Okay, so I'm invalidating this trade. Uh, we can always go back, or we can wait we can wait for the fair value gap to be to get invalidated, to be invalidated, like this one here. Let's see. So once the price will break this, I'll exit. If not, let's see. So because two of our criteria is already it's already uh, like it's already check mark. So the only left now is to get this fair value gap invalidated. Okay. Actually, stop loss should be here. Should be there, like that. And then actually we hit 1:2. I I just put my I put it. I think we hit. Oh no, we did it. We did not. Supposed to be like that. Because your stop I forgot to mention your stop loss should be on the first candle that created this inefficiency or this fair value gap, and it's where you put your stop loss. All right, so let's see where is this candle close, and then we're going to okay. Let's see. So you have an option to like end the trade here or end the trade here. It always wants it always. So now we'll do it again. We'll find another entry again. Okay, cross. Let's trade all of the signals. Cross. Supertrend reversed. There's a displacement. Created market shift. And then let's wait for the fair value gap there. This time I'm going to put my buy order here on the 50%. Now there is a I'll put it here. Wow. Stop loss will be here. And then take profit will be there. Yeah. Okay. We'll see. That's why we're here. We're testing this strategy. So I back tested this strategy for a 1 month time period, and there's like a almost 70% win rate. And the time frame or the session where you apply this strategy is only on a kill zone, only on a kill zone only. Okay, we have a minor market shift, and then there's two market shift that look for. This will be like if the price will break here. This is a 5 minutes, maybe 5 minutes. A break of structure on 1 minute, but it will be a 5 minutes market shift structure. And our range, where's our range? You see our range? Our range will be here. This is where are we playing tonight? We're playing to this level here, and let's see the 5 minutes. Okay. So so we're playing on this consolidation. So this is where we're playing right now. Okay, let's see. So of course that's why I'm telling you to manage your risk, and it's always safe for me to close the trade once this blue line crosses this red line. So if I didn't close it just for the purpose of showing it to you, but if I close it here once, I think I do have like $90 profit already, but I didn't close it just to show it to you. So if the price is here, don't chase it, okay? Let it go. If it will continue to go up, don't worry. There are always a setup that will, you can always have a setup. Now, look at this 1 minute time frame. So If the price will go up, the price will break this. Even here, maybe here, it will break. If the price will break this fair value gap is already invalidated. So don't just cancel it, because the tendency is this high may, because we are now playing this range, we are on this range. These are range. This is our range. Here, here, here. This is our range. This is our range. So if the price is already here, and then you're waiting for your this one to be mitigated so that you can enter the price, or we can enter the trade. The tendency is maybe this one is not, it's already not valid, because maybe the price will go against your direction. This is actually if you wanna, yeah. So if this price will, if will not go back here, will continue and break this area here, I'll not chase that, and I will cancel this, and I will wait for either a break of structure going for a continuation, or a pullback. So we'll see. Boo, boo, boo. I'm encouraging you to backtest this strategy, and you will see. You'll be surprised. Okay, so yeah, to those of you wants to know like clearly the steps, I put on the description. You can read the description. Okay. Mm, yeah. So I'm just to tell, I'm not that like profitable. I just recently discovered this strategy, that it's been there, and then I back tested it for 2 months. I keep on practicing on the replay trade, and there's a very good win percentage. Sometime during the consolidation, you will find yourself having like minimal loss. Like for example, right now our first entry, so it's a loss. But if you follow the exit rule, you can minimize, or you can prevent uh, loss, and definitely you can prevent your stop loss to be hit. So once you follow that, what I'm telling you, I put this criteria here. The red line, once the red line is the suiting line for the exponential moving average is 21, and the length is 10. And once the blue, which is uh, the moving average line, cross that red line, just exit or flatten your trade no matter what, so that you will prevent the loss. So that's what you do. Uh, so this is just a scalping. We're just aiming a little, like little pips. We don't aim for long, but there's a way that you can catch a long trend if you use this. And I will show you. I will explain to you. I will explain to you now. Where? Let's go back here. Let's find a, okay, like for example, this one here. I'll tell you. So when was this? This is around 12. Well, let's start from here. This is from the opening of the, this is from the opening of the session today. It's 9:30 and 30 a.m. Okay, I got it. So let's replay this. I don't care about the trade actually. Okay, oh, where? Let's see. So our entry. Okay, so we're on the trade now. Where's this displace start? Displacement starts. The cross starts here. I'll put my stop loss. Ah, this is a bad trade. Did we hit that ideal stop loss? This is the ideal stop loss actually. Let's follow the rules. That's the ideal stop loss. And because we're just testing, I don't care if we hit that stop loss. So that's why we're here. We're testing this strategy. Okay. I don't. Okay. We'll see. But let's replay the market. Okay. From here, let's do replay. Let's do replay. Okay. I'll show it to you. That you can never get wrong of this strategy. So now I'm not looking, or I'm not assessing, or I'm not assessing the trend. This is just pure moving average. So the where this is today. So this 9:30 is the opening, right? That's the opening of the market. New York session opens at 9:30 here in the USA. Now we're observing the price. The rules: you will not enter the trade unless after 9:30, right? After 9:30. So right now the cross started here. Here, this is where the market shift, and then we have it's trending down from 8:30 down to 9. Market opens. Okay, you see. Now market opens. We have the cross, the first cross. It's not yet clear. One more. So there's the cross. And yeah, there's the cross. Supertrend shift. The supertrend shift created displacement. And there's a pair. Let's see what we can. There is a fair value gap here. And then if you want to catch that, I should put my, I'll put my order here. And sometimes if the movement is strong, you will not able to catch it. Don't chase it. And then our target is 1:2 or even more. Let's see. let's see, you're scalping and you're observing the price. So you see the pips, the ticks, it's 100 plus. So this is a lot. That's why the ideal is 40 during Asia, and if you are trading like 1 mini, this is equivalent of 1,000 already. Okay, we hit the price. You see, there's a strong rejection on the fair value gap. So I'll repeat that because I will need to see using the we'll use this one here. Okay, buy. Okay, there. Hold on. Your stop loss will be here on this first candle that created the inefficiency, and then you are trailing like you want to because you're aiming to catch the big movement so that you can earn more, right? So I told you that the criteria to exit this trade is once this blue will cross this red line. So until then, you will not close the trade. Okay, so you see, let's see how much you will have trading minis and risking 400. Oh, it's 400. It's not 1,000. So you're not closing it. You just keep going, keep going. Everything is on the bull. All of the indicators are going bull. Everything's aligned. It's keep on coming up, okay? It's not crossing your red. You're shooting, okay? Not crossing. And then observe once it's crossed. That's okay. That's it. Cross. You end the trade on a right time. So once the cross, end the trade. You see how much you have? If I close it early, maybe you will have 1,500. So that's how this strategy works. And then here you have your strategy tells you to sell, right? So you see, if I close it early, if I close it here, when the moving average line crosses the shooting 10 of the exponential 21, you have 1,900. Like you have 1:4, 1:3. Now this price or the indicators tells you that you will sell because the moving average 9 crosses the 21. So you have a cross there. I'll show it to you. There's a cross. And this is perfect because why it's perfect? You have an option to enter this trade if you want, because it crossed right exactly on the on the more than like maybe a 70% retracement of the inefficiency. So if you want to enter this trade, you can like that. But the tendency is you will have like how big is your stop loss. So for me, I will not enter this trade because I don't know what will happen. So we will not, because that risk we cannot tolerate to lose 1,000. Now, this is where I will find my entry. Maybe I will enter here once the price will go here, retest this, and I'll stop. My stop loss will be there. Let's see if we can, or maybe we cannot. So that's why I told you that if you are using micro, if you use micro, you use like two micros probably, and you enter here. Most likely you will just risking 300, and you will catch this big movement. Let's see, and then you see where you're not closing there. You close there, so maybe you will have at least 500. So that's how you scalp this this strategy. I don't know if you follow, but that's how you scalp the strategy. Yep. Are you following to those 9,000 watching there? If not, I put the steps on the description, like how you execute the strategy of this simple moving average down the description. And if you're new to my channel, please subscribe. I'm a new trader too. We're new, new to futures. Uh, if you have a hard time trading, or you're not being profitable, or you're not passing your funded account, don't worry, you're not alone. You're not alone on that journey. I think most of us new trader been there. So that's why some when I one time I do a live session. I do a live. I'm trading ICT, and I have like a young guy commented. Yes, he posted a comment on my YouTube live, and he said, "You're being too complicated. It doesn't need to be like that." And he said he was ICT trader too, but he said there's a lot of ways to earn from trading, not using much brain. Don't You don't need to use more. You don't need to strain yourself. And it told me that back test, use moving average. Moving average, you can never get wrong on moving average. And I don't know why most of the people are not trading moving average. And I don't know why there's a lot of guru. I said I'm not a guru. I'm just sharing my strategy. There's a lot of guru there selling their strategy, uh, asking you to sign up for a lot of money. And once you sign up, they will teach you a super complicated trading strategy. But yeah, I don't know. You don't need it doesn't need to be that way. We don't need to go through that process. Don't. Okay. So I'll move my I'll move my I'll move my entry. You see, we already hit already. You see, we already we won. We have 1:2 already, but that's what I'm not being greedy. I have a criteria to exit, and if you want to catch a movement or continuous movement, use the exit rules that I told you. So right now, everything's aligned, and the blue line is too far from the red line, which tells me that the price will continue more, and then we just break this. You have an option to re-entry, and I'm telling you why. Because on a 15 minutes time frame, this is our range, and then it looks like since 3 p.m. Since 1 p.m. we are on a uptrend. Basic analysis, very basic. Every one of you knows this. If the price trade like lower high, lower low, lower high, lower low, like, yeah, creating like this, and then if you are you're a trend line trader, that's why I'm telling you, basic is always, it's more profitable than the complicated, fancy strategy. Before, I don't believe, when I enrolled in one of there's a YouTuber, a Chinese guy. He's really good at explaining everything. And then I signed up on his academy. He's teaching smart money concept. It is helpful. And then according to them, trend line is not real. But I found out that the most easiest, and I passed all of my challenge using a simple strategy. When I was using ICT, uh, I'm having a hard time. I didn't. Yeah, it's too complicated, and I failed multiple account. I fail. I passed some of that account, but I still failed. Oh, so yeah. So by this time, if you wanna, you can put your stop loss there to make it break even. So there's a strong rejection in this, so maybe it's grabbing liquidity. Liquidity is not reliable. Okay, let's see. We did not pass the previous high, so still let's target this area, and then we're done for tonight. Uh, okay. Like that. Mm, yeah, trend is going. Yeah, you're right. Trend is going up, but we are on a 1 minute time frame, so it's really not confirmed unless we will break the 5 minutes. It's trending up. You're right, but still our range is our range for tonight. So go. Yes. What time is this? So this is our range for tonight. This one and this one. Okay. If the price breaks this area here, this price here, 20,017 or 20,020, 20,020 is the psychological number. We have two psychological number tonight, and that is 9,900. This is our psychological number. So what do I mean by psychological number? If you are a stock trader, there, okay, I hit my profit. I hit my profit. If you are a stock trader, if I will buy, for example, if I buy Nvidia and the price is for example 19,900, I will put my order here in 19,900. It's a common to all of the if you're buying stock. And if I want to sell, I'll put my sell order on 20,020. So that's what I mean about yeah, it's about psychological number. Yes, Thomas. Um, okay. Yeah, you keep on learning. You don't need to pay you don't need to pay something to learn. Uh, yeah. We'll take I'll take some break and then let's see. Maybe we can find another entry, but most likely I will not have. Okay, I'll be back and I will I will recap everything. We will do replay trading uh, of today's session and this Friday. And then I will explain or I'll walk you through again to my trading strategy. Okay, I'll be right back. Hello guys, I'm back. Are you still there? So yeah, before I'm going to end this soon. So before I end the trade, yeah, well, I'll be trading later at around 2 a.m. to get some, to scalp more. During London session, volume is a little bit high, a little bit. The volume is a little bit heavy, so maybe we can have some more ticks. We'll hunt some more ticks in there, but I hit my here. I have. So let's review the trade that I took tonight. Okay, and I will tell you why I took that trade. So this is the last trade. I have like two entry, and then it's for educational purposes only. So that's why. So yeah, I do have like we hit four 1:4 profit, and the market is still trending up. I'm expecting that this will go and will try to uh, test this area here, this area, 20 or the psychological number 20,000 or 20,020. Maybe try to test that or this one, and then we don't know. Maybe the price will continue. Will go back to downtrend because generally, in general, go to 15 minutes time frame. Uh, since this drop last Tuesday, we are consolidating. So the price for the past 2 days is ranging to this 19,000. I should say, yeah, 19,000 19,835. Uh, and this is new high for the past 2 days is 20,115. So this is the area where the price is ranging right now. So if you are a 15 minutes trader, this is your playground. Uh, but I am a scalper because I switched to this new strategy. So I'm a scalper. 5 minutes time frame still. This is your playground still. Yeah, I can. This is still your playground. But if you want to zoom more on this Asia session, your playground is, I should say, this is your area here. Uh, and I know there will be a boom. There will be a movement during London opening. That is 3 a.m. New York time. But for now, this is our area. This is where you find your scalp. So from here going there, I think the price is on, we are on, okay, we are on a premium zone right now. Um, if you are a swing trader or if you wanna, if you're expecting that the price will go here, maybe I will not trade. Don't trade because we are already on a premium zone. Uh, there's a possibility that the price will go back here and go up again. So it's what I mean for that is the price is expensive by this on this area. It's already expensive. But if you were just scalping, what I do, 1 minute time frame, uh, I will not enter the trade because the strategy that I'm using is not telling me to enter the trade. So I will explain to you my strategy. We will recap the tonight slow market, the tonight slow market. Okay, let's recap. I have a two entry. I entered this market twice. My first entry was here. Okay, during the open Asia session opening. So Asia opens at 2000 or 8 p.m. in New York time. So this is the opening, right? Okay. So the strategy, we will recap. So what we're looking for, we're using a combination of Supertrend, uh, length is 14, factor is 3, exponential moving average 21. You add suiting, you had suiting sorry, smoothing. You had smooth moving average. To that, if you're using trading view, it's already there. Add 10. Okay, and the source is closed. All of the sources closed, and then you have the simple moving average. I did not include the smoothing for this. We only need this simple moving average 9, and on the source is closed, and that's the blue line. The green line is the 21. Okay, so this is the component of this scalping strategy. 3 components. This is your indicator. Okay, that's your indicator. So what are you trying to look? Number 1, you're looking for the moving average 9 to cross the exponential moving average 21. So when the market opens, uh, rules, you don't trade unless market opens. So you trade, you hunt your signal after the market opens. So the market opens here. We have the cross here, right? That's the cross. The blue line cross the green line. Now we see some fake. I will say fake. After this, there's a fake. This is a displacement, and then with a displacement and signal, and then the super trend shift to bearish. So this is my first trade. So my strategy tells me that I should sell, and then that's why sometimes you can predict. I was hesitant to trade this because of this movement, but this big candle here, I said maybe we're going up, so I was hesitant, but my indicators tells me that I should sell. Everything aligns, and I said I should sell the cross, the super trend, the displacement. But this bothers me earlier, and I thought, okay, I will trade this because maybe this is a manipulation. Okay, or someone entered the trade, and then after that sell out, and then this is another displacement, another displacement. So I have the cross, I have the super trend reversed to the sell side. I have the displacement, and then I have what I'm waiting to enter, which is this one here, fair value gap, and then I put my entry here earlier. See, that's arrow line. That's my execution, and I put my stop loss here. So it's kind of like 34 ticks, and then I was aiming for 1:2 always. Yeah. So if I follow the 50% rule, I hit 2.2, but I didn't, because I was afraid that the price will continue to go down. So this is the optimum entry. You put your limit order on the 50% of the inefficiency or fair value gap. But what I did earlier is I put my entry here. Actually we'll remove that. We will make a rules that we will target the optimum entry. We will target the optimum entry because uh, if we cannot catch the price, for example, the price didn't go back to this area, the 50%, just touch this and then continue. Let it. There's the setup will always come. So forget about the trade. There's a lot of setups that will come to you. So let the price come to you. So, but I was, I'm still emotional a little bit. So I put my entry there, and I was aiming for 1:2, like that. So the price didn't hit my take profit. And then I told you that I have a criteria to exit the entry or minimize your risk or minimize your loss. And that's the purpose of the red line, which is this smooth moving average 10. And once the blue line, which is the moving average 9, cross the red line, and then no matter what happened, no matter what you see, just exit and flatten your trade. So if I exit here and I follow that rules, I don't have a loss tonight. Maybe I will have I had maybe I had $90. But because for the purpose of education, for education purposes, I show you. You have also an option to, if you're really like betting that the price will go down, you have an option to exit the entry once. Number one, cross. The blue line will cross the red line. First signal, so okay, exit. Second is if the super trend reverse again against your bias, exit the entry. And if you really want to have a third confirmation, uh, exit the entry once the the fair value gap invalidated. So that three category or that three checklist, it's enough to tell you that go exit the trend. Don't let the price hit your stop loss. But I let it hit my stop loss because for the purpose of this video, so that you can learn from it. But if I follow that, I don't have a loss. Now, after that, the price reverse. There's a cross, moving average cross here, moving average cross there. Tells me that signals me that okay, we're going to buy the price reverse there. See, and then we're waiting for the displacement there. After this ship, there's a displacement, and then there is my entry criteria where should enter the trade. The fair value gap, bullish fair value gap, and you see exactly. I put my entry there on the 50% and mitigated. So your stop loss, you put your stop loss on the first candle that created the fair value gap, hit, and you can always, if you're afraid that may sometimes the price will break this order block. Well, I call this is an order block at the same time. Will break, price will go down there. You can put your stop loss if you see it's not that. You can put on the candle that started the displacement. But if the risk is too high, I should say put it there because not not all the time, but most of the time, if everything aligns, the price will not will have a hard time testing this. So um, this concept that I incorporated to my entry on this moving averages crossover is ICT methodology. But because ICT, you need to have liquidity. You need to have there's a lot of things that you need to think. You need to apply before having that entry. It's more easier to just get that methodology. So I'm just using like fair value gap. Displacement is not it's not from ICT, but the fair value gap, it's a terminology of ICT, and the order block, of course. So yeah, so it's more on moving average because the most important is to know where is your bias. That's why you will win the trade if you will able to identify where is the market going. So so in order for you to identify where's that market going, uh, even though the trend telling you that in general it's going up, you will never know. I know you experienced it. Your indicators tells you if you're not using that price will go down. Like for example, this one here tells me that the price will go down, will continue to go down because we are still on the equilibrium of the 5 minutes. But all of a sudden, the price, the buyer, the retail traders, surge, and then the price is going up. We don't know, but you can manage your risk. You can maybe you can avoid loss if you follow exactly the exit rules. So if we follow that, we haven't like we don't have a loss for tonight. But for the purpose of education, I did not, so that to show you. So you see, I have my 1:1 4. And then you have also an option to let the trade go until you have the rules to exit. So if I follow my rule, if I do that, because because the only reason that I did not do that is because I don't want to spend more time trading right now, because I'll be awake later at around London time. So if I follow that, you see, we are still trending up. We're still trending up, and the blue line is still too far from the exit criteria. So look at that, beautiful, right? Yeah, the trade perfect, right? You see. Now I will not chase this movement. It's like too. I know. Last week there's a there's big movement same as this during Asia session, and I did not chase it, and I don't want to chase it, and it went up to the roof during the Asia session, and if I enter that trade, maybe I will have like 10,000 within that night. And if I let my trade go, and I did not, I just keep on trailing, or putting my take profit, go all up and up and up. Maybe by now I have like 3,000 already, but it's okay. You don't need to be greedy, because setup is always there. Trade will always come to you if you follow strictly your rules. So you see, now I will not enter a trade now. I'm going to sleep, but at 2 a.m. I will try to look for another during the London opening. There is there are a lot of there are setups that will come. There will be a cross, no matter what. It always will appear all the time. So that's how the price moves. Go up, down, and will create some indication for us to enter the trade. So I don't know. I hope you learned something from this video. I'm really hoping. Uh, uh, yeah, test it, run. Yeah, if you want, I can before I go to sleep. If you're still there, Thomas, I will show it to you. Let's back. uh, Yeah, are you still there? I will show it to you. This is a quick. Let's see how many uh, how many wins we will have without a loss. And let's start from the opening of the market today. Are you ready? Uh, all of you watching, do you want me to show it to you? Okay, so I do have 9,000 viewers right now. Thank you for tuning in. Okay, let's do it. And let's remove all of the drawings. Okay. So when you are trading New York session, let's start on a New York session. Always start around 9 o'clock. Just to observe while drinking coffee, observe the price action, but you will not enter the trade unless after 9:30. Now, I know you've heard someone told you that you never trade any news event, and that's true. Never trade any news event. But when I back tested this strategy, regardless of any news, kind of moving average will really tell you where is the price will go, and will warn you once the price will reverse. That's the beauty of moving average. And you can I don't I cannot you cannot predict that if you are using another. I don't know. This is the I only have two strategy that I master, the ICT and this one, and right now I love moving average better. So 9:30 is the market opening. Let's replay this. Let's do it. All right, like that. So you see, I'm on 1 minute. I don't care where is the price will go and what is the general trend. This is a pure observation of the moving average. And let's see. Okay, so the number one, we're looking for the this blue line to cross the green line. Okay, so put the blue line is the, again, blue line is the moving average line, and the green line is the exponential moving average 21, which I put that on the description. Let's see there. All right. Okay, and we have the cross. Not quite a cross. Let's see more. Okay, there we have the cross, right? We have the cross. Okay, that's what we're waiting for. And then number two, you see this? The super trend shift to the direction of bull. And aside from that, we are on displacement. This one is a displacement already. And then we have the fair value gap. Okay, we do have the fair value gap. Now, someone of you will, we have two fair value gap actually here. 1 and 2. And which one you will choose? If you have two fair value gap, which one you will choose? So I will say measure that 2. That's how you do it. And then put your entry here. Or if you are not really sure because this high movement, and then you are afraid that maybe the price will not mitigate the 50% of these two, you can customize your Fibonacci. You can use a golden zone entry. What is golden zone entry? What was it supposed to be here? A golden zone entry is you will take the 70 if I'll use the Fibonacci retracement. Let's see. So where's your entry? Let's reverse this. Actually, to reverse this, suppose reverse. So this is the 70 golden zone, which is the 61% to 78%. So if you are afraid that the price will not go, mitigate your, put it there. But the tendency for this, telling you, bad is your stop loss will be here, right? So it's too much of a stop loss. So I will say I'll just put mine. I don't care. Maybe I will put even further here, and then I will not chase this trade. I don't care if the price will not go back. I just want the price to come to me. I'll put it here. So don't worry if you cannot catch the trade. Will continue to go up. Don't worry. There are always an entry. So if like this, you see this candle, the wick is from here. It's too long. Just get the body of this candle here, or this one here. So you have like 26 ticks. You're minimizing your loss. It's only 26. And then 1:2, or 1:2 if you want, or trail it up. Just keep on going until you have the rules to exit. Like for example, like that. We'll see. So it did it. So you see, the tendency is always there. So that's if you really want. So yeah, I thought this is a tick. So it's a good. I did this a while ago. Okay, let's see. For the purpose of education. Okay, so you want to risk 500 to this trade. You use 1 mini. Okay, you use 1 mini, and you put your, this is, you want your price to hit this fair value gap. So 40 ticks to 50 ticks is the ideal. More than that, don't risk too much unless you're using a micro. So if you're trading on the 9 a.m., use micro. So let's see. Okay, buy. Put your stop loss here. How much? Okay, 500. Say 500, and you are aiming to have 1:2. or more than. Okay, now you win already. You have 1,500, and if you want, if you don't like, if you are greedy, like for example, you're greedy and you want to, you're expecting that the price will continue to go up. So exit the entry once the criteria to exit the entry will show, or the signal to exit the entry will show. Just keep on going. Let's see how much we will have. Now let's play. Buy. Stop loss that we can put it there on that first candle, and then let it go. Let it go. Okay. So now you're observing. Once the blue line will cross the red, exit the trade no matter what happened. Okay. Now we'll see how much we will have. Let's go one. Let's faster. Let's see how much you will have. So by observing, the blue will cross the red, and that's the time we will exit the entry. Okay, are you still expecting to go up and up and up? Other early exit that you can do is once, you see, they're closing each other now. They're closing each other now. Exit, because they crossed. Okay, you exit now. I'll pause it. You exit and you have 1,700. So you have an option to, once you, if you are, you also need to study candle formation, the basic of the candle pattern. And if you see this, you see this three, this one, two, three. This is a pure three candle reversal pattern. So if I will see this on my trade, actually the four, my indication is this four. There's a one bull that failed to go up and break this one, a candle that failed, and then there's a three, one, two, three. This will tell me that the price will go down. This is a, and then you see, and then there's, this will be the order. Will be the order block. So now, once you're here, you have your cross again in there, right? You have your cross. Okay, let's see. Now you want to sell. So for me, this one, I will not consider this a fair value gap, this big movement. This is an institutional movement, meaning someone short this, someone sell big amount of money, maybe a hedge fund or maybe a bank like that. So I will enter on this fair value gap most likely, win or loss. So where's the fair value gap that I will choose, because this one is a display. This one is manipulation. And then there's a little bit buy side, and then there is a displacement, and we have a market shift. We have all the criteria. Super trend, support, or sell. There's a cross. So I will put my fair value gap here. Now let's try to sell this fair value gap and see. Uh-huh. Okay, so like this, this is the true displacement, because created the true this one market shift. This one market. Now this one will be most likely the price will not go there. Now we'll enter on this trade, on this area. My stop loss will be here. Let's see. Sell. Stop loss will be there. Look at that. You see, that's why I'm telling you that always trade a micro on this, on New York session, because the volume is high and then strong tick, so you got stopped. So that's what micro. We got lost. We got lost in there. And I will Let's see, where's this price go? So we're wrong in there. So this is true one. So it's not always wins. This is the true fair value gap. I was mistake. That was a mistake. Yeah, that's the true fair value gap. But of course, I'm not perfect. That's how I read it. And for me, I will not trade this reversal because it's so volatile. But it happened that you trade this and you enter here. If you enter here on this cross, how much you will get? You will have. Let's see. It's still risky. It's still, the risk is so high for one mini. So I will not trade unless you are using micro. We can follow this because our our strategy tells us that that's this entry. So we'll see. Yeah, we can. 1:2 is we have 1:2 already there, and the blue didn't cross the red line yet. You see? Yeah, we can have that trade, mini or micro, and then we'll wait to cross. So you will exit. So you have 800 still, but the price will. Then you can always enter if you want to. If the price will cross again, and all of the signals will align, you can enter again here. Let's see if I. So maybe I will enter on this. If I will trade this is my entry. But um, during I only trade once. Once I have like I won, or I take profit, I will not enter. You don't want to give back your win, right? So you already have that huge movement. You don't need to enter this crazy price action here because this is too risky. Because you ended up putting your stop loss too high. So that's another criteria not to enter a trade. If you're risking too much, don't enter the trade. But if the signal tells you to enter and then the risk is minimal and there is a beautiful price action, we have that cross, we have that displacement, we have that super trend, the support, and then the risk, we have the fair value gap, and the risk from that fair value gap, the first scan is minimal. That's a good entry. So uh, back test this strategy. Let's see. Let's have one more during the afternoon session. So you only use this strategy during will be 9:30 to 11 a.m. That's your window. If you cannot find any setup, don't trade beyond that. 9:30 to 11 a.m. for the NASDAQ and ES, and also for if you're a forex trader, uh, Euro USD works. This works best. And where you get your, if you are a forex trader and you're using this exponential cross, trade the Japanese and USD, and you will have a huge profit because that pairs of forex always move on. Like it has sometimes one directional for the rest of the day. Back test this strategy. If you're a forex, number one pair is the JPY USD or USD JPY. Number two is the Euro USD, and then that's the only things I think I will recommend. Also, this works on gold too. It works on gold, but if you're a futures trader, ES and NQ and crude oil, they it works best on that. But if you're a beginner, choose one pair or choose one commodities or in indices. For me, I love trading Nasdaq. It's because I'm familiar with Nasdaq. Um, but the session is like what we have earlier, uh, 8 p.m. to 9:30 8 p.m. to 9:30 to maximum 11 p.m. That's the Asia session slow market. And then uh, if you want to catch more volume, London opening, which is 3 a.m. to 4 a.m. That's your window to trade. 3 a.m. to 4 a.m. This I'm talking about New York time. So adjust your if you're on Southeast Asia or anywhere else on the adjust your time frame. Uh, yeah, yeah. It's keep on beeping. Anyway. Uh, and then New York session, you have PM and AM, so works best on 9:30 to 11 a.m. And let's try the one more sample. Let's try the New York New York PM session. So New York PM session starts at 2 p.m. to 3 a.m. That's the silver bullet time frame. But you can start from actually you can start from 1:30 to if you want to 1:30, or if you really want to observe the market, like for example this one here, it's a beautiful movement. See, 12:30. This is a lunchtime macro. You can never get wrong this. Okay, you wait for the blue line to cross the green. Didn't cross yet, but we have already displacement. Well, displacement is already there, like that. So this one, if I trade this one, I will enter exactly on this because of this kind of pattern reversal. You cannot, if you will use this fair value gap, the chances you will not catch this. So I will enter, and then I will put my stop loss there. If, almost like then I'll keep it going. You see, and then you have a choice to keep it going until the blue line will cross the red line, and maybe you will have like, yeah, you will have more. Let's see how much we will get. We will have delta. So just right. Yeah, 1:2 is always the best. I think you don't need to be greedy. 1:2, just target 1:2 on all of the setup that you have, and then here the chances the chances I will buy. This is a fair value gap. I'll put my stop loss here. So that's a good one. And then let's target 1,000. Mm-hmm. Wait for the uh, I will not move it. So we lost, but it's okay. So you see, just cross in there. So if I move my stop loss, so that's a good stop loss. So the chances once you have this catch this movement, no, if you're not greedy, you don't need to go and hit. Yeah, you don't need to enter another trade. So why we have that? Because we enter the consolidation phase and because the market is like closing. But either way, uh, that's why cats. This is macro. Lunchtime 12 to 1300, and then silver bullet. I don't know why this market today is not during the silver bullet is not volatile. I just don't know. Yeah, so that's how you trade this strategy. Try to back test this to the pairs that's where your best pairs, and then you will see. Uh, I think we will see soon. We will see we will see pullback in a while. We will see pullback in a while. Yep. Or maybe we'll just retesting this. You can put an entry here, but I'm already late here. Yeah. Maybe we'll retest this one here and then we'll continue to go up. I don't know, but I will not trade because the chances I will not catch a big movement. Maybe once the price will hit this liquidity here, maybe we'll go down. So I cannot wait for that to happen because I'm sleepy now. But yeah, uh, so that's how this could go up to, yeah, most likely could go most likely we could go up here, and maybe, because we're still trending up, actually. Maybe let's see the 15 minutes time frame. But I'm kind of trader that I don't want to speculate, even though I will see the price breaking resistance after resistance and after resistance. I'm not a support and resistance trader. I'm not a trend line trader. I was a ICT trader, pure ICT trader, and now I moved to moving average because it's where I earn a lot on moving average. So that's why, and then I decided to share my scalping strategy for those who to, for those trying to pass their funded account. Maybe this will help. So if you're, are you having a like, are you having a challenge right now, Thomas? Or you pass funded account, or you are trading are you a forex, or are you a uh, futures trader? Um, so yep. Right now, I don't see any setup, so I'm not. I will not enter trade, but I'll be back later at around, if I can. Yeah, maybe I will wait. I don't know, but I will change the battery of my alarm. Yeah. So yeah. So if you are trying to pass, or if you are hard time passing your uh, funded account, or you keep on losing, uh, don't don't lose hope. Uh, been there, been there. I lost a lot. I went to some depression also, because I don't know what to do, and I kind of it's not addiction maybe, but don't jump into any real money trade. Don't trade real money or jump into prop firm challenge if you don't have a solid strategy. So there are some few crucial steps you need to take to prepare yourself to be successful in trading. First is practice. Practice on a demo account first. This is where you can perfect your strategy without risking real money. I know some of you don't take that a real deal, because there's no emotion involved. But if you practice using a demo account and test your strategy, back test your strategy, it will help you a lot. So do that before jumping into a prop firm or a real money account. And by doing that, it won't stress you. It's not stressful enough, and uh, it is very important also to treat a demo account like a real money, so that you'll have some a little bit emotion on it. So after you do that, next thing you'll do is establish a trading strategy that suits you. Okay, establish perfect that strategy. If you could be scalping like I do, or something more long term, but whatever strategy you choose, stick to it. The markets can play with your emotions, especially when things aren't going your way. But the key is discipline and consistency. And this is the hardest part. Until now, I'm still breaking that discipline, and as a result, I don't have my consistency is not that good. So last night, I have a live last night, and I lost $800. It's because I did not follow the strategy that I'm on now. Uh, I was tempted to the market structure, to the price action, and it's perfect. It's like a perfect setup for ICT trading on what you call that, an Asia model. So I use I use my old strategy, the ICT Asia model, and then I end up, lost like $800, and then I was a little bit like upset of myself, but it's okay. Uh, then I end the trade. Then finally, uh, and this might be most important part, I told you, managing your emotions. We all get excited when a trade goes our way, or frustrated when it doesn't. But trading, especially in futures, is all about staying level-headed. You can't afford to let your emotion dictate your decision. That's the another most important. And whatever you're winning or losing, the most important thing is sticking to your plan and maintaining emotional control. Um, the hardest part of trading is psychological, this emotion. So once you conquer that emotion, like for example, like what I did last night, I lost, and I saw some good setup, but I did not take the trade because I already lost, and I'm getting emotional. So I just turned off my computer and locked my account so that I cannot enter the trade for the rest of the day. I don't wanna, because the tendency is once you lost, you'll be emotional. The tendency is you will revenge trade, and then you'll end up losing more. So there you have it. So that's that concludes for tonight. My session for tonight. Uh, every day I will be diving deeper into the strategies and tips for passing prof firm, and I'm not like other. I'm not. I'm telling you, I'm not that. I'm not that good, but uh, I'll be transparent to you. I will show my trades live, win or loss. You will see it. You will see it. All right. Good night, and I'm ending this live for tonight. Thank you so much for tuning in. For those, I reached 11,000 viewers tonight. That's okay. Thank you, Thomas. I really just started with stocks. Okay, so I don't know if you can use this strategy on stock market. I'm not a stock market trader. But I invest in some of the stocks, like mutual fund indices. But I don't trade stocks. I treat stocks like real estate property, like a land or like a gold. If I see some good stocks, undervalued stocks, I'll buy, and I'm holding my stocks. Like I'm an investor for long run investor. Yeah. So thank you. I'm not a full-time trader. I'm just doing this. I'm doing this live for entertainment purposes, and sharing my strategies. And I'm also hoping that someone will add to this strategy. Maybe they will see something. Hey, you need to add MACD on your strategy. For maybe one of these days, someone will tune in and then teach us to enhance this strategy that I'm using. But I know some people using this. I've read about the moving average, and they said it's been there for more than centuries now. People are using this strategy for a long time, before computer are invented, when the trading is just paper trading, like manual reading numbers. Yeah, they've been using this for long. And then the easiest way to trade is to use easiest strategy that available there. So find your easy strategy and use that, and you can never get wrong. All right, thank you so much. And maybe tomorrow I will do live. So since market is not open tomorrow, I will choose a week to do a replay trading on a New York session. Let's try last week. So I will do a live session and do a replay trading on the last week, and we will apply this strategy, and let's see how much will end up having at the end of the week of that replay. And let's see how what is the percentage of our win, or what's the win percentage of the trades that we will do for tomorrow. So thank you so much, and good night. Bye.